Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.
The markets take us down. Ford takes us for a ride. Bitcoin loses a quarter of its value, and Microsoft is turning off the lights for their Internet Explorer. That and more tonight on Wall Street Wrap-Up. Hi, and welcome to Wall Street Wrap-Up, and I hope your week went well. I'm Andre Laborde. Our goal is bringing Wall Street to your street. For today, Friday, May the 21st, 2021. And to get you ready for the events ahead, we've got a great show for you this evening, so stick around. Tonight, we'll be talking with John Najarian. Now, maybe you might know John from CNBC as a stock and options analyst, but John is an action options trader, investor, and author of a number of books on investing and making money through stocks and options. But first, how did the markets do this week? Well, the Dow did post a two-day winning streak, and the Dow Jones Industrial Average ended the week at 34,208. That was up 124 points for the day, but down 0.5% for the week. And the S&P 500 closed today at 4,156, down 3 points for the day, and down almost 0.5% for the week. And finally, the NASDAQ. They finished the week at 13,471, down 64 points for the day, and edged up slightly for the week at 0.3% for the week. The Dow Jones and the S&P 500 posted their second weekly decline, and the Dow did post a two-day winning streak. The NASDAQ posted its fourth negative session, but the NASDAQ snapped a four-week losing streak, barely. And Bitcoin, well, they closed for the week, ending today at $36,201, dropping almost $14,000 that's a 28% drop for the week. So let's get to our guest tonight. John Najarian is also known as Dr. J, and he's a CNBC contributor, an active options trader, author, and best of all, he's here with us tonight. John, welcome to Wall Street Wrap-Up.
Hey, it's my pleasure, Andre. Thank you.
Good. John, you've had such an interesting career so far, and it's certainly not over with. I mean, from what I know of you from your start, you started off with the Chicago Bears in the NFL. All right. Then you went into the Chicago options, pits. Did you find your football career was just exactly what you needed to be trading options?
I did, Andre. I always say that people are looking for aggressive traders in the pit, and you'd probably say most pro athletes are aggressive. And I think the fact that they're also disciplined. I mean, I get up every day really early and still get a workout in, all these years later because it keeps me disciplined. The biggest thing that you and I know about trading and making money is you have to be disciplined. A monkey could throw darts at a board and occasionally have a big winner, but the monkey's never going to liquidate when he needs to or she needs to, and is just all about discipline, cutting your losses, letting the winners run, and then just showing up every day because you never know which day is going to be the best opportunity.
The emotions, the human emotions of fear and greed, okay? And like Gordon Gekko said, greed is good, in Wall Street.
Yeah.
But it drives a person because when everybody else, you're looking to guys to your left and right are selling, maybe that's a great time to buy.
Yep, absolutely. And you're preaching the Warren Buffett Bible right now because, and I've lived by that Bible. Be fearful when others are greedy, and be greedy when others are fearful. So on big sell-offs, not 0.5% or 1%, but on big sell-offs like we had last March, it's tough to get in there and pull the trigger and basically get into a bigger position or establish a position, but it's the right time to do it. When there's blood in the streets, that's when the best opportunities are. So volatility has been my friend for 40 years in the markets, and I'm sure that even though it might not feel so good, especially like right now in Bitcoin, it's the best opportunity in the markets when there is that blood in the streets.
It's funny you bring that up because, John, people that know me, okay, know that one of my favorite sayings is like from Bernard Baruch, always buy when there's blood in the streets. So
Oh, yeah.
you know, I thoroughly understand. Got a question. I've seen pictures, but I've never been in the option pits. All right. But I've seen, pictures of it. Is it true that because to say people are superstitious in the option pits is an understatement. Because let's say if you're making money in the option pits on Monday and you're wearing a certain shirt that you happen to have spilled coffee on that Monday, you're not about to change that shirt or that whatever you've done for Tuesday and Wednesday and Thursday if you're doing right, if you're making money on it. Is that true?
That is true.
Really?
You can tell how well the pit is doing by the smell, because as you might imagine, you get a lot of sweaty traders in a very crowded pit. You can tell if they're making money because they're all doing, or most of them are doing just what you said. And in fact, one of our guys once had a bad day trading. He came home, ripped off all his clothes, and cut them up with a pair of scissors and threw them out the window. And his wife was looking at him like he was crazy. And he said, I'm never wearing that stuff again.
When you're in the pits, you're trading with your own money, right?
Yeah, it was when I started, and it's still for the most part that way, although floor trading has died down dramatically, sadly. You're more or less an apprentice. So when you start out, you'd have whatever money you have, and then the boss puts up a lot of money, and you trade, and he probably gets, or she gets 70%, you get 30. And then as you make more and more money, as you return all their capital, all of a sudden it skews the other way. It goes to 50-50 and 70-30 your way. And eventually you basically just say, okay, thank you very much for the help. I don't need it anymore. And you're just friendly competitors from that point on.
I say. And when speaking of competitors, all those other people, all those other guys in the pits, they are your competitors as well. If they can psychologically, emotionally get you rattled, that would help them out. Is that right? Because it's not like everybody wins or everybody loses. If they win, then you lost. If you lost, then they win. Is that correct?
Yeah.
Yeah.
For the most part, yes. Although when you're in the pits, your real competition is the people that aren't in the pits. Mm-hmm. So in other words, the orders that are coming in, whether it's from Merrill Lynch or Schwab or E-Trade or Goldman Sachs, that's the order that you're competing against. And you fight the other folks in the pit for the right to take the biggest chunk of that trade because you have time and place advantage usually. Now, because of technology, that edge has diminished greatly. And that's why there aren't very many pit traders anymore. It's probably dwindled from 6,000 in the city of Chicago. It's probably less than 500 right now.
Really? So is it that the biggest reason, or is it also because of the money that let's say a pit trader who does well and could make $1 million, $2 million a year, where they're like the guys on the New York Stock Exchange at one time up to like 10, 15 years ago, the stock exchange traders, there were hundreds of people, giving market orders for stocks. Now it's all almost done electronically with as in NASDAQ as well too. Is that also could be a reason as well?
Yeah, it is. I mean, the faster trading gets, the more it's just machine driven. And the human beings are just kind of getting in the way, if you know what I mean. So, yeah, the edge is now whoever can trade and react to news fastest, and that's never going to be a human being. The human beings down there on the floor, for the most part, are only there for exotic orders like spreads and things like that. That's where they're making their money right now. Machines could replace that, of course, but it's been negotiated so far that you have to have a certain amount of human interaction with the orders. Otherwise, when they really need buyers and sellers of the last resort, we wouldn't be there if there was no money to be made.
I see. Now, when you had your own business in the pits, from what I understand, and correct me if I'm wrong, but you sold your business to Citadel. And Citadel, besides being a hedge fund and have many things. They do high frequency trading, HFTs.
Yeah.
Well, for people who may just start with stocks today and they're very happy that when they buy and sell stocks, it's all free, it wasn't at one time free. But high frequency traders, they pay companies like Charles Schwab or Interactive Brokers or TD Ameritrade, things like that. Is that split second of high frequency trading worth it that much to these companies like Citadel or Virtu and such to be able to
Yep.
pay for all these trades? Really?
Yeah,
Okay.
absolutely. In fact, the firm that you mentioned just there, Virtu, when they filed their S1, which is, of course, they're going to go public. They're already public now, but when they were filing their S1 4 or 5 years ago, they declared factually and proved it in their S1 that they'd only lost 1 day out of the last 1,400 trading days. So as you might imagine, that's not just an enviable record. That just says that they have edge every single time they trade, and they're so much faster than anybody but another computer that sometimes those computers try to spoof each other, meaning, they try to head fake. It's going to go down and it's really, they're about to bid for it. But the computers are so fast and they learn so quickly that those head fakes only last for fractions of a second. So it's really just an arms race. Who can get the most order flow from people that are pointing and clicking? That's that order flow you're talking about that they're buying from those discount brokers.
Yeah. It's interesting, John, that today we have algorithms that can do it. And one of the things that I know that sets you apart with your brother Pete is that you've developed an algorithm to be able to figure out where the money is going toward options and search. Well, that's the same way, I guess, with these, whether you're talking about Virtu or Citadel or other high-frequency traders as well. So the algorithm and the advent of more computerization, this is what's causing all of this that's going on?
Yeah, it is. That has driven the traders off the floor. It has created opportunities because we like to look at our algorithm as something that clears what would otherwise be a really hazy picture. Because when people are trading and quotes are coming at you at 7 million quotes a second, which is what it is right now in the United States, you can't see a thing. It's flashing, it's not flashing, it's just one steady light stream at you. So the computer's the only thing that can read it. So we're just looking for big accumulations of calls, which is bullish, or of puts, which would be bearish. And when we see that, then we're just like surfers. We start paddling right along in the same direction that those big orders are going. So it's not really that complicated. It's just a question of you can't see it with the human eye anymore. So you have to examine it instead with a computer that can follow it in that fraction of a second.
And so, well, John, when I've heard you many times on CNBC and also your brother Pete, when you bring up things like we have heavy option trades or call buying in Tesla or heavy puts in Apple, pick your stock, whatever it is. What does that mean when you have heavy options? That means more people are, if more people are buying puts, should you do the opposite, or should you go along with the crowd because they know something more that you don't? Information is the key.
Yeah, exactly. The latter. Information is the key. I mean, Andre, as you might imagine, you and I don't have a team of analysts and assistant traders that can go to every analyst day for Tesla or for Apple or for MicroStrategy or wherever it might be. We don't have that. So somebody does, though. It's whether it's Citadel, whether it's George Soros, whether it's David Tepper, somebody on Wall Street has an analyst at every one of those analyst days listening for keywords that the CEO might say at that analyst day, and that's going to be the driver to either buy or sell for them. So I want to follow somebody who's got, a staff of 25 traders and analysts that is at all of those events, somebody that's buying with their order flow, because hedge funds have order flow too, and they're going to direct it through Deutsche Bank or Goldman Sachs or JP Morgan or whomever, and they're going to get the first call when somebody's making an upgrade on that stock. And they do that by virtually trading hundreds of thousands of shares a day with these prime brokers. So that's how they get that intel, and that's how they get, the first look at something that might be market moving. It's not inside information, but it's certainly valuable information.
There's a hedge fund called Medallion, and Medallion also had an algorithm. Jamie Simons was the originator of Medallion, and they too created an algorithm that they took the human element out of it, that it's all done by computer. And I mean, they've been, since their inception, they've been bringing in remarkable returns for the people, but it's done through this algorithm of what's going on.
Yep. Yep. That most people, whether it's Renaissance Trading or Medallion, most of these folks are analyzing exactly, the best opportunities second by second, microsecond by microsecond, not by the week or month or year.
Yeah. John, thank you. I should have said Renaissance was the hedge fund and Medallion was the fund. So, but you're absolutely right. It was Renaissance. Thank you for that. We're going to take a short break. We're talking with John Najarian, author, investor, and options trader. We'll be back right after this. And we're back right now. We're talking with John Najarian. So happy to have him. We're talking about options, about investing, and such. And we're talking about algorithms and how the split microseconds can mean so much when it comes into trading. John, when I mentioned your name last week, we started getting a lot of viewer email going, could you ask John this question? Could you ask John that question? So what I'm going to do is, it's okay, I'm going to let some of our viewers ask the questions. We've got Louis from New Orleans wants to know, John, why is that one is not allowed to place an automated stop-loss order when trading binary options, such as those offered by Nadex? Now, one can place an automated take-profit order, so why not a stop-loss order? I mean, in order for losing out of a trade at the Nadex, one has to literally sit there staring at the screen, sometimes for hours. I think that this is true for other binary option platforms as well, but why is that? So, and by the way, John,
yeah.
I just want you to know, our viewers at Wall Street Wrap Up is really smart. I'm looking for the bat when guys like Louis is already rounding third base. So go ahead, John.
Well, Louis is he's hit upon a good point. Now, Nadex is not like a regular options exchange, like, for instance, the New York Stock Exchange, Amex, Philex, Chicago Board Option Exchange. There are now 16 listed option exchanges. So Nadex instead creates these binary contracts, which can only be something or nothing. In other words, the light switch is on or it's off. So most options on Apple, for instance, you might buy a call option believing that Apple could rise from 120 to 130 in a 45-day period or something like that. On Nadex, you wouldn't be making that bet. You'd instead just say, well, I think Apple or whatever, MicroStrategy, Bitcoin, whatever they might offer, could go up by this much, and I'm willing to put up $45 in order to make $100, because everything is basically pricing out at 100. So if you're buying something for 10 cents or $10 rather, you've got 9-to-1 reward to risk ratio. For whatever reason, Nadex has elected not to let people have that automatic, that stop loss, but they do let you, as Louis said, take profits automatically at certain levels. Why they do that, we'd have to ask Nadex. I don't know. Okay. It's not part of the regular exchange community.
Got a couple of more questions for you, John. One is the practice of stop-loss hunting alive and well today?
Oh yeah, absolutely. And what this viewer is referring to is that when there is a technical level, usually, Andre,
Hmm.
like let's say, for instance, it just happened, in fact, in Bitcoin. Bitcoin $40,000 level was very key. It was near a Fibonacci number, which for technicians is important. And so a lot of people had stop losses right at $40,000 or perhaps even 39,500. When we hit that level, which the contract did, it just burned all the way down to $30,000 like that. I mean, it went down there in maybe 30, 40 minutes. That's how fast.
Ah,
So uh, the process of computers as well as people trying to ping the market to see if they can trigger a waterfall event like that, yes, that still goes on, and we call it hunting stops. It's not a practice that I do, but I know that there are some firms that are basing their entire strategy on finding those stops because when they catch them, like that example I just gave, it gives them a big reward very quickly.
I understand. We've got another one for you from Frank, and Frank is from Biloxi. Frank wants to know, John, with reopenings occurring, are shopping mall REITs, which are real estate investment trusts, are shopping mall REITs a good investment? What do you think?
I would say yes. And they were a better investment when, again, when there was blood in the streets. You know, last year in March, those might have been some of the best investments, along with the cruise lines, because who wanted to get on a cruise line or who was going to go into a crowded mall? Number one, they were going to shut down both. So without any revenue, those companies were going to suffer. That was the best time to buy Simon Property or any other REIT that might own mall shopping centers and so forth. That doesn't mean that they're done now, though. I think we've got a pent up desire to go out and shop. And as long as they give you a good customer experience, they're going to be rewarded with a lot of traffic. Those malls that either for whatever reason don't provide a good experience, well, they're not going to get that traffic, and instead people will shop online. So if you have the choice of shopping price and shopping online, people will stay there, but they also really want to get out and try things on. And I think that's where a mall retailer like Simon would really shine.
John, we just got about a minute left. I have to ask you, for those people that don't trade options, that have never done, but they look at it such as what we're talking about, and it seems very intimidating. How hard is it to learn how to do options as stocks, of puts, calls, and such that we're just discussing?
Mhm. It's not that tough. And I can say that confidently because my brother Pete is 6 years younger than me. He came right out of the NFL. He's a really smart kid. He was a 2 year academic All American as well as a regular All American in football at the University of Minnesota. But he'd never traded at all in his life. And he came down to the floor and became one of the best pit traders there was. It didn't take him years, it just took him months. And now there are plenty of firms like ours that provide education for consumers that want to learn. And I'd say the time frame has shortened up dramatically, Andre. So it's no longer multiple months or years before you'd actually be comfortable with it. I think most of your viewers could probably start confidently trading probably within 3 or 4 weeks of when they started learning about options.
Also, John, for those people that want to learn, want to get more about it, I know you have a website that you also help, and you also give like daily information as far as what are the heavy call buying, what are the heavy put selling, and such as what we're just discussing right now. If somebody wants to know more, is there a website that they can go to?
Sure. Marketrebellion.com or marketrebellion.com/get started. They'd see everything that we've got: education, subscription, coaches, mentors, all of that for stock, options, futures, and cryptocurrencies. We've
Yeah.
got teams of traders that we've put together that can provide exactly what most people need to get started in the business.
John, we'll put that up. We've also got a number of your books that we've been putting up throughout the interview that
Oh,
you've written as well, too. John, the clock doesn't stop, but I sure hope you come back.
thank you, Andre. I love the show.
Thanks so much, my friend John Ajarian. Really appreciate him spending some time with us. Well, if you've got a question about finance or a comment about the show, we'd love to hear from you. You can write us at andre@wallstreetwrapup.info. Keep it pithy or concise, and we'd be glad to answer your questions. And now for a look ahead for next week. But first, on this day, May the 21st, back in 1901, Connecticut became the first state in the Union to pass this law that is now standard in every state and municipality in the country. What is it? Well, we'll have the answer in just a minute, so stay tuned. On this day, May the 21st, in 1901, Connecticut became the first state in the Union to pass this law that is now standard in every state and municipality in the country. What is it? The answer? Speeding. Motor vehicles were limited to go no more than 12 miles an hour in cities and a maximum of 15 miles an hour on country roads throughout the state. Of course, you could always gun it on those country roads up to 15 miles an hour. And speaking of gunning it, well, this week, Ford unveiled its all-electric F-150 Lightning. The F-150 has been America's top-selling vehicle for decades, and the company has a lot riding on this electric truck. President Joe Biden, speaking on Tuesday at a Ford plant in Michigan, even took one for a test drive. The F-Series Lightning electric vehicle will be starting deliveries as of next year. Now, almost 40 million F-150s have been sold since being introduced by Ford in 1948. And by the way, it's the #1 vehicle made by Ford. They sell one every 30 seconds. Well, Microsoft is also retiring its Internet Explorer after more than 25 years in service. Microsoft is pulling the plug on its Microsoft Explorer browser that has dominated the web for over 25 years. But with today's competition from Google's Chrome and Safari, well, they just couldn't keep up. The app is being replaced by Microsoft's Edge, which offers more speed and security and a built-in IE mode. Well, join me next week when my guest will be Joe Livonia. And Joe has served as special assistant to the president and chief economist of the National Economic Council, known as the NEC. He advised President Donald Trump and the NSC director, Larry Kudlow, on developments in financial markets and the economy as well. We've got a lot to ask him about the economy today. He'll be here next week, my guest, Joe Livonia. Well, that's our show, and I hope you've enjoyed it. For Friday, May the 21st, 2021. Remember, you can also follow us on Facebook and WYES.org. So thank you. Thank you for joining us and allowing us into your homes tonight for Wall Street Wrap-Up. I'm Andre Laborde. And remember, money never sleeps. Good night.
Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.